Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We're going to be looking at Twitter today, which is our blog, and we're also going to be looking at 52-week high stocks that you can trade for the weekend. So let's get started. The chart you're seeing on the screen is a chart of Twitter. It's a weekly chart. I want to point out a couple of things here that I'm seeing that I think you should look at also. First of all, we have our trend line. It's all the 3 points we like to see. It's a very valid trend line. Then we have the break below the trend line. But one of the interesting things also is this right here. This week, these are weekly charts, remember this is weekly charts we're doing, was a bearish engulfing line. Now we've talked about Japanese candlestick charts before and how powerful they are, especially when you get a setup like this. So a bearish engulfing line means you have one, let's say, box like this, then the next box is actually, or the candle I should say, is engulfs the previous box like it just did here. So you can see here and here. It's the body that's engulfing, not necessarily the lines, the candles, stick lines, just the body of the candle. The important thing is the next week we closed lower. You see that? We actually closed lower for the week, indicating that this was a top. Very important to see those type of formations. They're very, very powerful, and they actually do work. I've seen them work years and years and years. I've watched this phenomenon continue to work. So we had that as the top. We came down, tested the trend line, which was in place because we had 1, 2, 3, 4 spaces, 4 candles to say that was a valid trend line. We actually got that fifth one right there. It bounced up just a fraction, not enough to turn it up, and then boom, right through the trend line and crashing down. Now the other thing you want to look at here is, I'll take everything off the screen, and using our Fibonacci tool, I drag from the top to the bottom, and you can see we've had a 61.8% retracement of this entire move that really began in June of this year. So the pullback, definitely important. Is it going to be supported here? Well, a couple of things maybe say no. If you look at the weekly charts, this again, we're looking at the weekly charts right here, you can see that we're below the 50 line. That's an important element to remember. That's a very strong trending. Plus, if we put our trade triangles in, our monthly trade triangles, you can see 39.94, and the weekly came in right here before the trend line was broken, and that came in at 49.15. We're currently trading at 40.16. Let's go on to a daily chart. So there you see the monthly right there, and you can see we've just really got that just a few days ago, and you can see we're very close to that area of the 61.8% Fibonacci retracement. Now look, we're very oversold, no question about it. If we come down here, you can see we're sort of trying to flatten out, but it hasn't turned, and it's particularly noticeable if you go back to the weeklies. And this is what I want to share with you, the weeklies, using the weeklies and the dailies. On the weeklies you can see it's below the 50 line. Also, if you look at this area, it just crossed over recently, just in the last several weeks, and is a long way from being really oversold. So I would say the trend, the bigger trend, with all of our trade triangles negative, continues to be negative for Twitter. Okay, enough on Twitter. Let's go to a 52-week high and low, and let's see what we see this week. So we click on Smart Scan, and then we're presented with our normal list. You can see the 1-week low, 3-week high, so forth. So the 52 weeks high is what we're looking for. We have 414 there. So if we do that, we'll click here once, it'll show 414, which I think you'll agree is way too many to go through. So we're going to pare that down and filter it down to match the results you want to see. First of all, let's go to the equity we're doing. I want to do equities. Let's do a last price below $20. This is going to give us a bigger bang for a buck. So let's click there. Let's choose the $20, and let's go the average volume over 2 million shares. That's it. And we just want to do the U.S. exchanges. So in the scan, so we have 414 right now. Let's see where that goes down to. 6 charts, much easier to understand. So we can scope this up, and we can see which charts look good. Well, here's at Western Union, really rammed up from this 1550 area all the way to 18. It looks as though it can go higher, right on the highs of the day. It's up 18 cents, and it looks very, very good. Same thing with this Navient Corp common stock. It's up just 8 cents, but it's on its highs. JetBlue Airways looking very good. NASDAQ Integrated Device, I'm not sure what that does, but they're looking good too. And let's just go to scope this out again, and let's look for less than 50. Let's see what we get with that. Less than 50. Scan. 31. Okay, so that's more choices because we're creating a greater universe. And it's just U.S. exchanges. Now, looking at some of these stocks, I mean, this Iron Mountain looks really good. It's up at $1.38 today. Nice base, boom, and next another leg up there. Same with Lennar. That's a very nice stock. Looks like it wants to have another leg up. Liberty Global looks good too, coming from a nice base. Another leg up there. Zoetis, I'm not sure what they do, but they look to be on a run right now. And Western Union. Now you can see we were looking for markets that are really strong and closing well. So the key here is if it closes close to its highs at the end of the day, I'd say go in about 3:45, look for these stocks, pick some out that you like, and then go in and make your orders. You know the rules. We buy today, we hold it on Monday, and we sell it on Tuesday. I'll post the rules up for you here anyway. So, okay, let's look at the 52-week new highs on a Friday rule. What does it mean? Well, the good thing is there's only 3 rules that you need to trade. And remember, rule number 1, on a new 52-week high, when the market closes at or close to its highs on a Friday, buy and go home long for the weekend. Now, you want it to close pretty close to the highs of the day, not necessarily on the exact high, but close to the highs. Rule number 2, exit this long position on the opening the following Tuesday. So you're going to buy it on a Friday, sell it on a Tuesday. Very short term. Rule number 3, if the market opens sharply lower on Monday, exit the position immediately, take the loss, and move on. There you have it. These are the only 3 rules you need to trade the 52-week new highs on a Friday rule successfully. The rule applies also to futures and Forex, and you can reverse the rule. If it's at 52-week lows, you can actually short the market if you feel comfortable doing that. Simple approach and very effective. Have a great trading day, everyone, and have a great weekend. I'll see you all on Monday. Enjoy.